Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss the upcoming presidential election and important takeaways for financial plans. As citizens, voters, and taxpayers, the results of this election could have important implications for our everyday lives. However, putting political preferences aside, this is not necessarily true when it comes to your portfolio. In fact, the market and economy tend to impact the results of the election and not the other way around. Over the next few minutes, we'll discuss key areas of the candidates' tax and trade policies and why it's important to vote at the ballot box and not with our hard-earned savings. The race between President Trump and Vice President Harris looks to be a close one. Perhaps the most complex area where the candidates differ the most is with tax policy. It's important to remember that taxes are quite low today by historical standards. Investors should be prepared for higher taxes in the future, especially as the government continues to operate with deficits. One tax area that could change significantly is estate taxes. This chart shows the level of estate tax exemptions and the tax rate for assets above these amounts since 1997. With the Tax Cuts and Jobs Act set to expire at the end of 2025, the exemption on estate taxes could be cut in half. For those with assets that could be passed to heirs, this could have an outsized impact on tax and estate planning. Thus, it's more important than ever to seek the advice of a trusted advisor when it comes to preserving and protecting your assets for children and your grandchildren. Another major area that will depend on the outcome of the election is trade policy. The use of tariffs could differ between the two candidates, both as a way to bolster U.S. competitiveness and as a tool for generating government revenue. That said, it's important to note that the U.S. has run significant trade deficits with major trading partners, as shown in this chart. It's also the case that the tariffs put in place by President Trump during his term in office were continued by President Biden. With many trends such as deglobalization and reshoring taking place, tariffs could be used as a tool by either administration. For those investors worried about a potential trade war, the tariffs enacted in 2018 and 2019 did not result in the worst-case scenarios that many had feared. Thus, it's important to maintain a longer-term perspective when it comes to trade and not overreact with our portfolios. Finally, this chart simply shows that the economy has grown under both parties. So, while there are many important considerations when it comes to this election, it's important to view this in the proper context. The reality is that policy changes tend to be incremental, and not everything candidates promise on the campaign trail is eventually enacted. This is why it's important to maintain a long-term perspective in our portfolios and financial plans, and seek proper guidance when it comes to the impact of tax policies. We've only scratched the surface on this very important topic. If you would like to discuss this or anything else in more detail, please don't hesitate to reach out. We look forward to speaking with you soon.